Sri Lankan rupee is devalued at lifetime low as 400 Lankan rupees against $1. If drastic measures are not taken on immediate basis, Lanka will go down in the history as the bankrupt nation. As on February 2022, the Lankan foreign exchange reserves have fallen to $2.31 billion. Prices of the commodities skyrocketing, no money left with citizens to buy essentials, fuel shortage, no electricity, no medicines, road and rail transport coming to halt, billions of dollars of debt due to accumulated borrowing over years. The Sri Lankan fall has pushed its 22.5 million people into the existential crisis. This has made people to jump into violent protest, burning vehicles, destroying public property and leading to chaos and confusion all over. If you see the prices of the commodity, 1 kg of onion costs 340 rupees, 1 kg ginger costs 320 rupees, 1 kg sugar is 240, 1 kg milk powder costs 1900 rupees, a single egg costs 30 rupees, a liter of coconut oil is 850 rupees and petrol is 254 rupees per liter. So what led Sri Lanka into this deep crisis? When I deep dived into this crisis, I was able to bring some stunning, fascinating and surprising details for you. The first one is 2019 Easter bombing. In 2019 April, 9 Sri Lankan terrorists carried out series of bombings in churches and luxury hotels on an Easter Sunday in Colombo city. This was a massive blow to Sri Lankan tourism as tourism itself contributed 10% of Sri Lankan GDP and it was a third largest source of its foreign exchange reserves. Post this incident, foreign tourism arrival was dropped by 70% and there was a crisis looming. Second, COVID-19 pandemic. Just as the situation was improving, COVID-19 pandemic struck and it only worsened the economic crisis that Sri Lanka was already going through. The tourism revenue fell to $500,000 in 2020 December from its February 2018's revenue of $500 million. Millions lost their jobs. Government adopted flawed tax laws by giving huge tax exemptions to corporates, making income tax more linear than countries like Australia was only adding to the crisis looming ahead. And the third, decision to ban agriculture fertilizers overnight. The Sri Lankan President Gotabaya Rajapaksa in his 2019 election campaign had promised to make Sri Lankan agriculture 100% organic over the period of next 10 years. But in April 2021, Sri Lankan government banned use of chemical fertilizers in farming without any precautions overnight. This decision pushed Lanka into food shortage and crop loss. By November 2021, when tea production fell drastically, government partially lifted the ban on key export crops. Later, as this ban was hugely impacting other crops as well, the government started lifting ban on many other commodities. But by then, the damage was irreparable. As farmers protested in demand for supply of fertilizers, government started importing them from China. But these Chinese fertilizers turned out to be below standards and were not suitable for Lankan soil. As Sri Lankan government refused to pay for Chinese substandard fertilizers, China blacklisted Lankan People's Bank and this was another massive blow to Lankan economy. The next point is dynasty politics. Politics in Sri Lanka has become Rajapaksa's family business. There is no other political party as nepotistic as Rajapaksa. During Mahinda Rajapaksa's second term as president between 2010 to 2015, there were more than 40 Rajapaksa family members in government posts in addition to cabinet ministers. President Gotabaya Rajapaksa, his brother Chamal Rajapaksa, Prime Minister Mahinda Rajapaksa and Basil Rajapaksa are the third generation politicians, while fourth generation is represented by Mahinda and Chamal's sons Nomal, Yashita and Shashindra Rajapaksa. According to former Power Minister of Sri Lanka Shri Patali Champika Panawaka, 78% of total debt owed by Sri Lankan government occurred during the rule of Rajapaksa. He adds on to say that the family in power have siphoned off $19 billion public money as per various sources. Yes, the dynasty politics is dangerous and has completely destroyed Sri Lanka. China accounts for about 10% of Lankan foreign debt. In 2013, China started pumping in billions of dollars in Lanka to build ports, roads, railways, pipelines and other infrastructure. But the catch here is majority of these investments were brought into city of Hambantota, which is the region where the Rajapaksa's family business are established. But all these were just vanity projects, but not of any strategic significance. As Lankans failed to pay back the debt to China, the Hambantota port had to be leased to China for a 99 years of debt equity swap. And at current debt, China is seeking to extend the lease period from 99 to 199 years. These developments and the gross mismanagement of economy, the policy failures, have attributed to the fall of Sri Lanka